Business credit has just been chugging along here in the background, doing its thing. Having the credit discussion is really awkward, and it can be awkward, but it's really important that you do that. It's very, very smart to get a business line of credit. Then you don't necessarily have to turn to a credit card or shuffle those credit cards. You can use that as you need.
Are you tired of all those finance bros showing flashy checks and cars, talking about how they use business credit so easily to be able to buy real estate? Well, today's episode, we're going to break down if that's actually possible and how that even works. Let's welcome Gerri from NAV. So we're going to dive into business credit today. Gerri, thank you so much for joining me today. Can you just introduce yourself, the woman really behind what you do, before we kind of get started here?
Oh, I'm delighted to. Thanks for having me, Becky. I started in the consumer credit world over 30 years ago when nobody knew what a FICO score was or what a consumer credit report looked like. They had never seen theirs. Things changed a lot, in the next first 10 years of my career, and wrote my first book about credit. It was the first mass market book that talked about FICO scores back in the day, so that was fun. And then about 15 years ago, I met Garrett Sutton, who is an attorney. He was on Robert Kiyosaki's Rich Dad team. And so he started asking me about, his clients' challenges with both business and personal credit. And he had seen a lot of these ads, and his clients, frankly, his audience, were being pitched a lot of expensive programs around business credit. And he said, "What's the deal? Let's figure this out." So we wrote a book together called Finance Your Own Business. And in the process of writing that book, I met the CEO and co-founder of NAV and ended up with both, quotes from him in the book and a brand new job, and focused on business credit. And ultimately, business owners are consumers too, right? So ultimately, both are really important. They play a role for a lot of entrepreneurs, especially in the early days. And so it's fun to help them figure that out before it creates big problems for their business, if possible.
I'm always curious how people ended up in particular jobs or industries. Was finance and numbers kind of in business always something that you were interested in, or was that just kind of how career kind of transpired over your younger years?
It was completely accidental. I had a degree in business and political science, thought originally I wanted to be a doctor, and organic chemistry kicked my butt. And I said, this is not for me. So, so I didn't do that. And just looking in the financial field, bounced around a little bit, and the job came open at an advocacy organization. So it was a nonprofit. And in those days, if you wanted a low interest rate credit card, you'd send us $4 in the mail, and we'd send you a list of card issuers, mostly in Arkansas, with low interest rates. And that's how I got into this field. So it's been really, really interesting seeing it evolve. And then, of course, I got to testify in Congress on credit protection legislation, got to help work with other advocates on the plain English free credit reports that we now, get to access, and all those rights. So it's been a lot of fun. It's been an interesting journey.
This is not something that I thought we were going to talk about today, but I have to ask this question. Mm-hmm. As landlords, we tend to use credit scores, FICO scores, as one of the evaluation processes for tenant selection. Do you feel that credit scores are worthwhile to use as an indicator of if someone's going to pay their rent or not?
There's some controversy around this because we do know that some people either have very thin files, they don't have much credit information, and that results in a low score. Some of them are even what's called credit ghosts or unscorable. And then the other controversy is we do know there's sort of a relationship sometimes with just economic status, where you live in the country, and your economic opportunities. And so that can be, another challenge. What I would say is, if you learn to understand credit a little bit, then you can kind of get an idea of where the real risks are. So if someone's paying consistently late on different bills, for example, that's a red flag. If they declared bankruptcy last year and there's not much debt, now they've kind of put that behind them, and you are top of the list of, the bill that they want to pay because they want stable housing. And someone who has just filed for bankruptcy is not a risk of turning around and filing right away. And as long as there aren't other debts that they're dealing with that could cause them to not be able to pay their mortgage, they might be a good risk. So I I have rented when I had my rental properties, I have rented to people with bad credit with mixed experiences. So I think
Right.
you have to really look at it in the entire picture. But if you get the right tenant and you give them a chance, they can be incredibly loyal to you.
It's difficult just because I've seen the same thing in my own rental business. The probably quote unquote worst tenant I've ever had the best credit score. So it is
Mm-hmm.
interesting how it is a very controversial topic. We might have you come back on, Gerri, in the future and talk more about credit scores, but let's dive into the idea of business credit. First, let's start with this. What is your title at NAV? Explain, please, what you then do and what NAV does in general, and then we'll dive into what business credit is and what that looks like to support investors.
Yeah. So my title is Education Consultant to NAV. So I'm currently in a consulting role. I was a previously full time with NAV for about 8 years. And so what I focus on is helping to educate business owners, whether it's through a webinar, a podcast, writing articles, updating articles, e-guides, all that kind of thing. That's my passion and that's what I enjoy doing.
Gotcha. Now, what does NAV do? Explain that.
So, the easiest way, this is not an official description of NAV. This is my personal way that I introduce NAV to people because I find it just easy for people to understand. It's essentially the equivalent of Credit Karma, but for small business. So, NAV was conceived as the first and only place where you could get your free, business credit information. It's not a full detailed report, but get your credit summary and then monitor it and then get tools to build better credit. Now NAV has both paid offerings and a free account option. But the whole point is you see your personal and business credit in one place, you pay attention to it, you build it, and then you open up, other opportunities for financing and growth as a result. That's the goal.
Thank you. Now, sorry, I want to get all the definitions out of the way so we
Sure.
can then talk about functionality. What is business credit?
So, business credit is a credit that is specifically about a business. So, the other term you'll hear is commercial credit, and that's the same thing. So, it's for any type of business and really any size of business. It's not designed specifically for sole proprietors who don't have an LLC or a S corp or some sort of business entity, but it can be used and developed by those. The problem is when you're just a sole prop, you have no legal separation between you and your business. So there's really no fully effective way to separate you and your business financially. And then it's create these bureaus have been around a long, long time. Dun and Bradstreet is one of the names you might have heard, D&B, and they actually Abraham Lincoln worked back for them back in the day, so they've been around a long time.
That is a new fact I did not know. Okay.
Yes. Yes. Yeah, it's like five former US presidents, but Lincoln is probably the most iconic of those. And so they were in the business when trade was growing across the US of trying to figure out who was it safe for merchants to work with. And so they write down information and then someone would telegraph it or call it or mail it or send a report, whatever it was in the day, the technology grew. But it wasn't that long ago because it was during the start of my career that, we centralized these processes into the three major credit bureaus that we all know today, Equifax, Experian, and TransUnion, put them online, made them easy to get, made them free to get at least once a year. And then all these free companies came up, promoting free credit scores as well. And you can get them through lots of sources. I've written an article for now that's like 125 plus places.
Wow.
You can get your credit scores for free. So that's all happened. And in the meantime, business credit has just been kind of chugging along here in the background, doing its thing, but it hasn't had the scrutiny of legislators. So you don't have the same experience. You don't have the right to see free credit reports. You don't have the right to get the credit score number if you're denied necessarily. If there's consumer credit information involved, it might, but there's just the transparency isn't there. And the biggest thing is building business credit is a little trickier because on the consumer credit side, you buy that, you get a mortgage, you get a car loan, you get a student loan, a credit card. It's going to show up on all three credit reports. Very, very rarely does a lender not report to all three. They've set up the system so it's easiest for them to do that. And then what they can do is turn around and purchase reports from all three, right? So the system is very just easy for them. On the business credit side, each bureau operates very independently. They don't share information. And so you will find some companies, some of your lenders might report to one, they might report to two, they might report to all three, they might report to none. So you have a little bit more of a, sometimes a lot more of a process of finding, identifying companies that will report so you can build that business credit history.
Okay. That's a really cool history of that. You mentioned in there about how sometimes it could be more difficult taking that sole proprietorship, right? Your S corp, sorry, your sole proprietorship out of being the individual, right? For business credit, what is the type of business structure that is needed? Can I just be an individual, which sometimes counts depending on how either a W-9 is filled out? Do I just count automatically as somebody that could apply for business credit, or do I have to have a specific legal structure to do that?
You do not have to have a legal structure if you are a sole proprietor and can want to continue to operate that way. And that's key because if you change later to an LLC or a corporation, you'll need to get a new EIN. That's the employer identification number. It's your tax ID with the IRS. You get a new one, and then very often it will create a new credit file with the credit bureau. So the efforts that you put in as a sole prop may not translate over, to this new entity. Now that said, real estate investors sometimes will set up multiple LLCs for different
Mm-hmm.
properties, right? And so in that case, maybe the sole proprietor's business is focused on property management and marketing and I don't know, service, whatever it may be, in repairs, whatever you want it to be. It's focused on a service that it provides to all the properties. And this could be in the form of an LLC or a sole proprietorship. And then that's where you focus on building your business credit. Now, if you really want to build it as a sole proprietor, again, you and the business are one entity, so you are limiting some options there. But if you want to get your business license from your state, get an EIN, you can get it free from the IRS for that business specifically. And then again, if you form another LLC for a property, you'll get a new EIN for that one. And what I encourage real estate investors who have multiple properties, and I learned all this, by the way, working with Garrett Sutton because he's an attorney. So, I'm working with real estate investors. So I'm not an attorney. I'm not providing legal advice. This is what I've learned by working with
We'll
Garrett.
add that disclaimer to the bottom of the episode. Don't worry.
Yes, no legal advice. But what they do then is have these individual properties and really focus the credit building on the business that can serve those different businesses. And that's a lot easier than trying to build credit for each property, which may not even be necessary because maybe you sub your renovations to that business, your property management and development business. And then the LLC doesn't necessarily have to worry about forming their own business credit rating because they're going to sub that out anyway.
Right. You mentioned that it was limiting yourself if you really were going for business credit as an individual rather than an LLC or as a different type of legal structure. Why?
The main reason is some lenders will only work with businesses with formal business structure. So you'll have fewer lenders who will be willing to work with you. Some financing companies also do the same. Now, you had a really great episode recently with Bree where you talked about some of these financing opportunities for real estate investors. And she was talking about things like merchant cash advances and business cash advances and business credit cards. And business credit cards are one that do not require a business structure for the most part. Most of them, you can get a small business credit card today. You say, I'm going to be a real estate investor. My company is Becky's Real Estate Dreams, and I'm getting a credit card in the name of that business tonight. And you could do that. So that would be really predicated on your personal credit. And it doesn't show up on your personal credit, but it checks your personal credit and you agree to a personal guarantee. So if your business can't pay it back, then you would be responsible personally for that debt. So it does have the benefit of usually keeping it off your personal credit so that debt doesn't affect your credit scores. And debt is a second most important factor in most credit scoring models. it keeps that off, and that is a benefit. But just remember, there will be a personal credit check, and there is, more importantly, credit checks. They usually lower your credit by about 3 to 7 points. It's usually pretty temporary.
Hmm.
But I think you mentioned this in that other episode. If you're going to go, you're in the process of getting a mortgage, you do not go get new cards without talking to your mortgage loan officer, right?
Right.
You just do
Say
not
that
do
again,
that.
Gerri. Do not
Do
go get new
not.
cards without talking to your lender. Yep.
That's right, because it just a little change in the interest rate. And by the way, I did work as a mortgage broker for a couple of years as well.
Oh, cool.
That was my very first job, and just a couple of differences in the points could result in a rate that you're stuck with for a long time till you can refinance. And so, be very, very cautious of that. This can be a nice way to separate the business and personal debt and also be taken seriously by lenders because you have this business entity that is separate from you. It is its own person under the law, right? The
Right.
LLC. So that's one reason why I try to encourage business owners who are really approaching this seriously. And
Right.
and when I started my business 30 some years ago, I formed a corporation, elected S corporation status. I think now today I would have chosen LLC with S corporation status, but that wasn't on the radar at the time. And there's been times where I have, went back and took a full-time job with an app, and I didn't have much money running through that, but I've kept it going. And now, I'm full-time consulting again, and I see just that it's that longevity alone, the fact that I have kept that going for that long period of time puts me in a much lower risk category than someone who would just start one today. And so that's another thing I want you to think about is, yeah, you're just getting started. But if you want longevity, some of these little steps you take now can really pay off in a few years as your business grows. And I know you said you started with just a duplex, right? So
Yeah.
you weren't even planning to get into real estate investing.
No.
But if you form an LLC around that time, and again, it doesn't have to own the property necessarily. You might want it to, but it could also be something that is real estate, education, marketing, property management, something adjacent that can serve the properties that you purchase.
I'm glad you mentioned about the personal guarantee, even with the business line. So this is going to be kind of part of this myth busting that I would like to do based on a lot of what we see on Instagram here that I alluded to at the beginning of the episode. So I'm just starting out. I decide today I want to be a real estate investor. I don't have great money saved, right? I don't have capital to go out and buy a rental property today. I don't necessarily have the best credit. People all the time are just like, oh, just go get business credit, go get a credit card, just put it on that. You'll be perfectly fine. Just go get started. You're saying, though, that I would still have to personal guarantee the loan and I would still have to have my credit checked. Is that a viable thing? Is that a doable thing with really no money in the bank, no capital, not great credit? Can I go out and start opening business lines?
You can. I mean, you can do it, but it's not going to be large business lines of credit because you have three things stacked against you. Brand new business, so time in business is a big one.
Mhm.
Second of all, you don't have revenue yet, so you're pre-revenue. So that's, going to be a third one, and you haven't built any kind of business credit or, banking relationships that they can look at and see. I mean, credit scores are designed to look at what you've done in the past and predict what happens in the future. It doesn't mean that brand new businesses don't get, funding. I mean, for example, the SBA, which is a good loan, but it's kind of intensive process, but they do give about 11 to 15% of their main loan program loans to startups, to new businesses.
Wow.
They do require 10% owner injection now, or owner equity. So that's a requirement that just
Oh,
came about in June of last year. But so there's options out there. You just have to I'm with you. You have to be realistic about this. Now, sometimes what you're seeing is people are partnering with what are called credit stackers. Is that a term that you're familiar with? Okay.
yes.
Yeah.
But I would love to make sure that our audience fully understands that. So if you wouldn't mind just describing what that is,
Sure.
because once again, that to me is a very Instagram flashy title here. So if you could break that down, I would also
Yeah.
love that because there might be a listener of ours being like, I've never heard that before.
Yeah, and I want you to hear it so you can also be aware of it if you get approached for this kind of financing. It can work for some business owners. So I'm not saying it's not for everybody. Coming from a consumer credit background and going through 2008 as a someone in the consumer credit background, I want you to be careful. I don't want you to go through that agony that so many people did at that time because they were significantly over leveraged then. But credit stacking is basically you'll work with a company that will help you usually get 6 to 10 business credit cards that don't show up on your personal credit. And they have, methods to try to minimize how the inquiries impact your credit by doing a very short period of time, et cetera. They'll try to look for 0% intro rates on those cards. So you have 0% interest for a time. They're going to be strategic, but then what happens is you get, 6, 7 credit cards and your credit lines are $75,000. And suddenly it's like, wow, I got $75,000 in business credit. Yay. But you have a personal guarantee. And if you're using the 0%, there will be a time when that interest rate ends and you will go to the regular APR. So just keep in mind that it can work. And here's where I've seen it work the most often is where someone will use those types of funds for doing the reno. And then maybe it's a fix and flip, so they get the money out. Then they have some cash that they can go into their next property with, because they can pay it off. A little bit harder if you're gonna, buy it and hold it. But I'd imagine you could get creative on how you do that, and then if you're making your payments on time, your credit history looks good, you haven't maxed out all your cards on your personal credit. Well, these are business cards, so that's not the issue. Then
Right.
you may be able to refinance, again, just to get and have a 2 to 3 year pay down plan that's reasonable, your numbers, it works. So that's what I think is a more realistic scenario with something like credit stacking.
And that would still allow people, if you're familiar with the Burr method, where people will buy a property, rehab it, refinance, and then rent it out, at
Yep.
least that way
Yeah.
with credit stacking,
Okay.
in my opinion, it would allow somebody to at least get in the game.
Yep.
And then
Yep.
really you're using that money from the rehab, from the value you add that you did on the property to then take on some of that equity to roll it forward. You
Yep.
have to be very, very careful about not over leveraging yourself.
Right.
Because now you're borrowing credit to get your foot in the door, and then you're borrowing credit again to kind of build from there. So in that scenario, you do have to be careful, make sure you can pay back all your debts here. But
Yep.
it sounds like with that credit stacking, and at least allow you once again to get moving, get something. And then hopefully, once again, whatever you purchase will start to allow you to pay down those debts as you continue to move forward. That's kind of
Yep.
the ideal scenario. So once again,
Yeah.
ladies, make sure you know your numbers and know them well. If kind of saying like, okay, if I'm in a spot where I have really no capital, not really great credit, and also once again, now I'm looking to get credit and I have a business that, is on day zero. If that's not necessarily the best time to attempt to get credit, possible, but still not necessarily the most ideal situation, when is the best time to start looking into business credit? Where should that fit within my business plan as somebody that is maybe not a full-time real estate investor, but starting to have, a couple different properties, starting to kind of grow and hoping to move into full-time investor in the future?
So the first thing I would say is if you're listening to this now and you haven't gotten started, start with your personal credit because strong personal credit is going to help. So really, really dig into that. And there's a lot of things you can do yourself to just get credit in a better shape. We do have a free guide that I wrote at NAV on smart credit strategies. I'll make sure I'll get that to you so you can share it with your community. And then for business credit, if you have formed your entity, I would start immediately because the history over time is so key. And a lot of businesses, because they don't know about it, they don't do it. And so they don't start building credit till, a couple of years into this business. So if at all possible, there's very inexpensive ways you can get started. I mean, you can get a couple of net 30 accounts to get, cleaning supplies, small things, maybe fixtures for your property. Maybe you get a Wayfair account to get some of their items. And a number of these companies will let you pay in 30 days. That's net 30. And then if you pay on time, you start to build a business credit history with one or more of the business credit bureaus. Now, I'm going to throw a little bit advanced concept in here real quick, just so you're
Please.
aware of it. There is also, in addition to the three business credit bureaus, Dun& Bradstreet, Equifax, and Experian, there is also something called the Small Business Financial Exchange. It was created by the big lenders to try to basically share information about their commercial customers without letting that information be used for any marketing purposes. And so what happens is if you're like Bank of America, you can report information in, and then when you buy a business credit report, you can buy a business credit report that has SBFE data in it. So they aren't a credit bureau themselves. They're a warehouse for credit data. And the reason I bring that up is because you may get a business credit card that only reports to SBFE. So when you're checking your credit, you don't see it, right? But it's there. It's affecting your credit. So you still want to pay it on time. So sometimes people will prioritize things they see on their credit reports versus
Yeah.
things they don't. If
Hmm.
if there's any chance it's reporting to the SBFE, that should be a high priority because those are typically financial accounts that carry a good deal of weight within the credit scoring model.
Huh. How do people check that?
Not currently, there's no way to do that.
Really?
Yeah, yep, yeah.
That's
So
fun.
like I said, deja vu.
That's okay. That's what's so interesting. Most of those in our community are women that have other jobs. They work in
Mhm.
other industries, and trying to navigate the world of real estate investing itself is its own beast. But
It
then
is.
also, once again, being a real estate investor really is being an entrepreneur. It is having your own business, and then now it's trying to learn all of these business procedures and all of these other like tools that we just don't necessarily like know about. So that's crazy that it's something being like, well, you need to be aware of it, but hey, you can't.
Yeah,
Like,
yeah, but you can't do anything. Yes,
right.
yeah, Congress pretty much has decided that business owners are sophisticated enough that they should be able to hire people to figure this all out for them. And the numbers from the SBA support our position, Becky, that most business owners are very small businesses. And I do mean very small businesses, maybe one, two, three employees. So,
And I feel like we're seeing that more and more as we have costs that are always rising, income homes that are really needing two incomes. Now all of a sudden it's not just great, my 9 to 5 really supports it, but you're seeing such an increase in this gig economy, right? We have
mhm.
so much more with now there's Uber and DoorDash and Etsy stores, and it sounds like everybody has kind of some type of side business on their own. So I feel like the amount of small businesses with really a 1 to 2 employee, like you said, really support team here, that has grown significantly. I feel like, especially post pandemic, and yet there's really not those resources. I should not be looped together with Coca-Cola as a business. I do not have the
Someday,
same
Becky,
resources
someday.
as McDonald's, right? So that's exactly, and that's why I love doing this podcast, and I love when women like yourself, Gerri, come on, because these are things that we're trying to learn about, but we don't have 6 figures to go pay somebody to be our consumer credit report person on our team.
Right.
So I'm glad that you mentioned that there. For those of us that are real estate investors or looking to become real estate investors, how can having lines of business credit benefit us specifically?
So, business credit benefits you in several ways. The most obvious would be financing, like those net 30 terms. And that could be something where, you're rehabbing properties and you get some of your supplies on net 30 terms, but you build up such a good relationship with your supplier that it goes to net 60. I mean, that happens. A lot of the trade suppliers do check business credit. And then they'll watch your payment history and your relationship with them, and then check your credit again just to make sure nothing else is going wrong. And that can increase your time to pay, which sort of like buy now, pay later in the consumer world. That's the equivalent in the business world. And it can be very important because having the time to rehab that property and then get it refinanced, get it rented, that could be the
Mm-hmm.
difference between whether this works for you or does not work for you. So those are very important. Insurance companies for commercial insurance may look at business credit data and when they're evaluating business credit insurance applications, and you could get a better or worse rate depending on that. And then also opportunities. So if you had some type of opportunity to move your business in a direction where you will be partnering with a larger company, then that would be something where business credit will come into play. And I'll just give you a couple examples because I'm not having a specific real estate example pop in my mind right now, but I think it's probably there. You know, a landscaper who told me he was bidding on a contract to do the landscaping for a shopping mall, and they were checking his business credit, not for his payment history so much, but to evaluate his financial capability. Did he have the capability to take on this project? And then another woman who was an accountant who worked at one of the big box stores you would certainly recognize after a webinar I gave. She said, "Oh yeah, we always check Dun& Bradstreet Paid X." And most of the businesses had no idea what it was. They just had no clue. So government contracts too. So if you want to explore the world of government contracting, that's also something where business credit can come into play. So there's just all these other places where it can come into play, and knowing you're going in strong versus worried and not understanding what you need to do just can make a difference in how you approach those opportunities.
Also, when you mentioned that about government contracts, what popped into my mind was also those that look to get certified as women and minority owned businesses. So, for example, if I wanted to buy land and create a tiny house development, this would be incredibly important.
Yeah.
Right? This is then where, once again, I could do that as a woman minority owned business, but I would also be able then which would help me get government contracts, but they're still going to look at me, the business, what I've done before to really say, not only is she paying back her debt, the money that she has been lent, but do I have the financial wherewithal to actually complete this project and to be able to move forward?
Yep. Yep. The other way this works for you as a real estate investor is, if you decide to take on partners, make sure you talk about credit. Because
Tell me more, Gerri.
every traditional lender will require a credit check on anyone with usually 20 or 25% or more ownership in the business. So this is essential. And SBA loans do require this, and we're talking personal credit checks. I was at a workshop where there was a group of bankers up front, and one guy stands up, he says, "Well, my credit is good, but my business partner's is really bad. Is there any way we can get the loan without involving him?" And they said no. They said, "We will check both your credits." So having the credit discussion is really awkward, and it can be awkward, but it's really important that you do that, because if you decide to go forward with any of these opportunities, there's a good chance if they own any significant portion of your business. I would say anytime it gets above 5%, you might be looking at something that might bring in their financials. So please keep that in mind, and maybe, talk to your attorney about how to best structure it if there is any issues that could be a problem. And then you too. So if you start having to subcontract work out to other companies and you need to make sure it gets done on time, you can check business credit. So that's another thing. If your contractor doesn't get the work done and disappears, how are you going to be able to collect? Do they have a pattern of this, or even your marketing company? If you have if you're doing paid ads for, lady landlords, and you hire somebody to do that, are they reliable? Are they going to just take your money and then not deliver on the results? And then what happens? And so unlike personal credit, where, it's pretty strict how you can check personal credit on your tenants. You have to go through a tenant screening agency, get their permission, all that. Anyone can check business credit.
That's interesting that's completely transparent. We're going to have to talk more about credit in the future. As I'm building business credit, in order for me to find lenders that now, great, I set up my LLC. This is what I plan on doing as a real estate investor. I want people now to fund and give me lines of credit. What are some ways to be able to find lenders for business credit outside of a traditional, let's leave the mortgage lenders alone, right? We're trying to talk more creative options. So instead of just calling up a mortgage lender, how am I finding lenders that are going to give me lines of credit for my business?
Yeah, well, one place is NAV. So if you have a NAV account, even a free account, you have access to the financing marketplace, and you'll be shown opportunities based on your business data. So some of those, I think there's at least one really good lender who is like a pre-approved. Others, you'll get the details, then you'll apply to get the final, decision. But either way, you're finding lenders who say, based on our criteria, which they don't often show us, right? They're showing NAV because they know it's going to stay with NAV, but it's not typical on most lender websites to see the full underwriting criteria, right? They give you an
Hmm.
idea, maybe you have to make this much minimum income, etc. So that's one easy place to just track it all down. The other thing you may want to look into is your local SCORE or SBDC, because sometimes they are an SBA resource. So these are organizations that are pretty much largely funded by taxpayer dollars, although SCORE got its funding pulled, a lot of funding pulled this year, unfortunately. But they provide free mentorship and free or low cost education on a variety of topics. And a lot of times they know what's going on in the local community. So they're kind of a good local resource. Like this credit union came in and talked to us and said they want to make these kinds of loans. There's nothing like someone in your community who can tell you that can be as valuable.
And I will say, I actually used some of the SBA and SCORE programs
Okay.
years ago. Little known
Okay.
fact about me,
Mhm.
I used to own a medical consulting company years ago.
Oh, okay.
And when I was learning to set that business up,
Hmm.
that was exactly like where I went. I went through some of their entrepreneur certificate programs and things of that nature. And they were a really, really great resource. And I do remember that they had that loan kind of matching space. So I love that idea of really making sure to connect and start to build your Rolodex, start to network with people, and start to
Hmm.
learn what your local resources are.
Yeah.
I'm going to go back to those flashy guys on the internet here.
Okay.
You see a lot of times with them talking about getting business credit cards and just
Hmm.
using that and
Hmm.
paying for rentals with credit cards.
Hmm.
Now, you talked about rental properties before and being a
Hmm.
mortgage lender yourself way back in the year.
Hmm.
Have you seen people buy houses with credit cards?
It's possible. I think it's becoming less and less possible because we have a convergence. Well, you talked about this in your trends for 2026. We have a convergence of higher interest rates.
Mm-hmm.
Lenders are pulling back somewhat on credit approvals and on credit limits because of the uncertainty in the economy. So you may not get as much as you did, when interest rates were at zero and it was you know, what they felt like a booming economy that, could do anything. And so you may or may not get what you need. And I think there can be a little bit of a timing issue there. I'm not saying it can't work, but a little bit of a timing issue because if you identified the property and you need to get approved really fast for all this credit, and then you've got to somehow convert that money into that purchase,
Right.
which, most places don't take a credit card as your payment for real estate, right? So,
No, I've
so
never seen a credit card slider
right.
at my closing table,
Yeah, so wouldn't that be
personally.
nice for perks? They get a lot of points that way.
Ooh, yeah.
So that so then you have to use a balance transfer, have a deposit into your bank account. There's just a lot of moving parts there. So I will never say it doesn't happen, but I would say it's complicated. It has risks, and you need to be careful and don't get too carried away by the hype. Focus on what you realistically can do, and then if this comes along and it's the perfect time, perfect opportunity, great.
Right.
Go for it, right?
And I love how you mentioned getting started with that sooner and establishing the business credit. You kind of don't know where or how you're going to need it in the future. So better once again to have that and start accumulating. Even just on the personal side, with my credit score, my husband's credit score. My husband is a very financially savvy man, and he gets so frustrated. I know he's going to listen to this episode too. He gets so frustrated that my credit score is higher. And the
Mhm.
one thing that sets us apart is that I have had lines of credit longer than him.
Mhm.
Now, I am older than my husband, so I've explained to him, I literally have just had credit cards longer than you have. So if everything else is exactly the same, the way that we pay back our bills, the way that we spend our money, the loans that we have, if everything is all equal, but it's literally just I have had credit cards for that much longer than him, my credit score will be a little bit better purely because of that and nothing else.
Yeah.
So it's sounding like exactly that in this situation, that better to get started with it, and then that way you have options of how to use it, it sounds like, in the future.
Yeah, yeah. I love business finance options. I love having those options, lines of credit. And that's another one we didn't talk about, but getting a line of credit. Once your business is established, I
Mm-hmm.
think it's very, very smart to get a business line of credit. Then you don't necessarily have to turn to a credit card or shuffle those credit cards. You can use that as you need. But having those ready, so it can be an opportunity, it can be a crisis. Whichever it is, it may be just what gets you through that as long as you do it carefully, talk to your mentors, don't just internalize it, right? Get some feedback from people who know what they're talking about. Um, and then that may be what gets you through to that next point so you can keep moving forward. I had a property completely, utterly trashed twice.
Oh my God.
Yeah, yeah. I am married to a handyman, so so thank God. But the second time it happened, he's like, "This is done. We're selling it." And we found a buyer who didn't mind. But you run into all kinds of things in this business.
Right. And then once again, now you end up having just these extra costs. I still will not forget, and for our listeners that heard my episode over the summer about my chimney issue, Gerri, to make a long story short, most of our properties are in New York. One of our multifamilies that we own is attached to our neighbor. Well, we found out the utility company came, and because there was a smell of gas in our building, and when they went down to check the systems, they actually red tagged and turned off our gas service because they said that we were overfilling what our chimney's capacity was. So come to find out that the neighbor broke a hole through the wall and attached their boiler system to our chimney and overflooded it, and it had too many fumes going up. Our choices were either to close the wall back, send all of these hazardous fumes back to his side, which probably would have exploded the place, which is attached to our building, so ipso facto exploding our own building, or we had that weekend to spend 10 grand to have a chimney added to the exterior of the building to go up 4 flights. We had to spend 10 grand in 24 hours. That was it.
Yeah.
And there was no way around it.
Yep.
So you need those funds on the side. So yes, I could have had that liquid in a savings account as my emergency fund, but I also could have had that in a business line of credit that I could have tapped into. So I didn't need it just sitting there in my air quote high yield savings account that makes nothing. But I could have had it where it's really something that I could have borrowed for one of these lines of credits to say, hey, this is an absolute emergency. My other emergency is I found a really good deal and I want to go buy it.
Yeah.
Let's go and be able to tap into this, but at least that I'm not paying interest throughout that time if I'm not borrowing that money from that aspect.
Yep.
I think this might be one of my last questions for you. What is something about business credit that you know that you just wish more business owners knew?
Well, I think you know it too, and that is that it's a tool. It's not a magic solution to unlimited funds. You are clearly aware of what it's like out there in terms of the hype around this, and I think sometimes when you come in very practically, that can be a detriment because people get excited to the hype, right?
I know. I feel like I'm crushing some spirits with this episode here today.
And again, it can really open up doors for you. I'm not saying it can't, but I'm just saying we need a realistic perspective. Just like your personal credit can help you buy that dream house, right? Business credit may help you build that dream business, but it's one part of it. The mortgage lender isn't just going to say, just because you have an 800 credit score, we don't care about how much you make. We don't care about any other factors. We're just going to lend you this money. That's the same with business credit. So you just have to put it in perspective. But yeah, it's a great tool. So, and the thing is, it doesn't have to take a lot of time. Sometimes it sounds so complicated. It really doesn't have to take a lot of time. I'll be happy to share a guide. I have a step-by-step guide on building business credit, straightforward. And you can do this in a few weeks. And then every month, just check in, see how you're doing, and make some adjustments.
I love it. Thank you. I will make sure for all of our listeners out there that I link the guide that Gerri's going to share with us and some contact information for her at NAV also down in the show notes. Gerri, thank you. This was so informative. You really took such a concept that I think, I'll at least speak for myself and say scares me, right, when I started to get into this industry, and it just seems very overwhelming. And I appreciate how you were able to break it down into such clear, concise ways to really make it, one, manageable, but two, to make it understandable for a smaller business owner. So thank you. I appreciate really your time, but also just the work that you do.
Yeah, and thank you. I like your approach too. It seems like you're very, very grounded in reality and also approachability. Like this is something I can do when I have a baby and a life. And
Well, once again, you were close to me recording this while breastfeeding. So yes. But my goal with this podcast has always been to take the concepts as I was growing my business. And I always think about what was the thing that I wish I had known, right? And once again, I remember seeing these people on Instagram being like, oh, just use a credit card to buy a house. And I'm like, how do you do that? So I just always like to either have like myth busting episodes or just how does this actually work? And that's the information that I would have wanted when I was getting started. And that's still, this is our 5th season of the Lady Landlords podcast. That's still the concepts, and those are the guests that I always look for, still filling those gaps because there is so much we need to know in real estate investing. And I like to really make this just like a crash course in what you need to know and what are the important pieces and what are the pieces that maybe you don't have to worry about so much. So thank you.
Oh, thank you.
For our listeners out there, please do make sure to hit that subscribe button so you do not miss the next episode of the Lady Landlords podcast. We release new episodes every single Tuesday. Also, if you enjoyed today's episode, and I know you did, please make sure to leave us a 5-star review. Reviews help other women be able to find our Lady Landlords community and get the support that they are looking for as well. So if you have a minute to pay it forward, please make sure to leave that review. Thanks so much, and see you all back in the Lady Landlords community.
Thank you for listening to the Lady Landlords podcast. If you're feeling stuck in your real estate investing journey, visit lady-landlord.com to book a 15-minute orientation call with me and see if you're ready to join our mentorship program. Or you can subscribe to our newsletter and join our Facebook group for exclusive real estate investing tips and offers. Invest with confidence. Become a Lady Landlord today.